Hi, my name is CH. I have worked as a managed investments product specialist in Singapore for over 15 years and would like to offer, through short video courses, the investments related knowledge that I have picked up throughout the years to anyone who is keen to learn more about investments. This video is part of a series of videos focusing on providing basic yet detailed knowledge on mutual funds for Singapore-based or Singapore-booked investors. In this video, we aim to explain the mutual fund company structure and fund share classes. The way mutual funds are structured is a bit complex, and when we talk about the word fund in a conversation, it can sometimes have slightly different meanings, even though it ultimately refers to the same fund. Let me explain. Let's start from the highest iteration, then move downwards. At the top, there is a company that is into running a mutual funds business. We normally refer to such a company as a fund house, or fund provider, or asset management firm. This can be a global company entity. In order to be able to start and manage actual fund business in a country, the fund provider usually needs to set up a local management company in that country. The local management company then sets up the actual investment company or investment trust in accordance to the country's legal and regulatory requirements. This investment company or trust is known as the fund family. The fund family entity is then able to create multiple sub-funds, whereby each sub-fund shares some common general family traits, but otherwise run their own unique investment portfolios. These sub-funds are what we normally refer to when we talk about a fund. The fund family entity is crucial in the management of funds, as it streamlines all common features to minimize redundancy. For example, the fund prospectus, which is an important offering document, is actually a fund family level document that covers in the front all general terms and clauses common to all sub-funds, such as the legal and regulatory and operational aspects that apply to all sub-funds. Thereafter, each sub-fund has its own unique section that is included in the prospectus. Let's go through a quick example. Schroders is a well-known fund provider or asset management firm with businesses globally. In order to run a funds business in Europe, it needs to set up a local management company called Schroder Investment Management Europe SA. This local management company can then create and register a fund family entity called Schroder International Selection Fund, or Schroder ISF in short. Within Schroder ISF, there are many sub-funds available. One of the popular mutual funds available for offering in Singapore is the Schroder ISF Asian Equity U Fund. If you open the prospectus of Schroders ISF Asian Equity U Fund, these are some of the things you will see. As mentioned, the prospectus is at the fund family level, which is Schroder International Selection Fund or Schroder ISF. The fund family is also the entity that is set up as a Luxembourg SICAV. Schroder ISF has a management company that is based in Luxembourg. Last but not least, the table of contents show the common terms and clauses, then the respective individual sub-fund sections. That's, however, not the end of the story. Each sub-fund will usually have multiple share classes. This is to allow for different investor types, different distribution handling, different currency trading options, and as well whether there are currency hedging options. Each of these different combinations create a unique share class of the sub-fund, which has its own unique identifiers, inception date, and price, or NAV. Some popular mutual funds can have easily more than 20 share classes to choose from. Different fund providers may use different codes or abbreviations for their fund share classes. So the same code can have different meanings in one fund versus another if they are from different fund providers. For example, some fund providers use the letter A to represent retail investors types, while some others use E or L or P to represent the same. The number of available share classes is completely dependent on the fund provider's willingness to cater to investor demands. Therefore, you may sometimes see a fund launching a new share class specifically for a new investor market, or close a share class if that combination doesn't attract investors anymore. When we say someone is buying a fund, we actually mean that the person is investing monies into a specific share class of a sub-fund. Therefore, when you talk about a fund, it is useful to be clear whether you are referring to just the mutual fund or a specific share class of that mutual fund. It is also useful to note that the fund prospectus is the only document that provides detailed explanation on the share classes and their different codes. Let's go through the different share class options in more details. Investor type option defines the type of investors the share class is designed for, the most common being retail versus institutional. But some fund providers further slice it into more layers. For example, PIMCO funds have retail, investor, administrative, and institutional types. Some investor type share classes are also created to handle specific regulatory changes, such as one for non-trailer option for UK investors after UK regulation changed some years ago. Different investor types also mean that the management fees charged and the minimum subscription requirements are different. It is important to note that different distributors may be allowed to offer different investor type share classes. For example, a distributor focusing on retail business may not be allowed to offer institutional share classes, or that a share class may be created exclusively for one distributor only. Distribution handling option is normally just providing investors a choice of receiving a distribution payout or let the fund retain and accumulate the distributions into the portfolio. Distribution payout is by default paid in cash in accordance to the currency of the share class, and the NAV of the share class decreases in accordance to the payout amount when distribution happens, just like a stock dividend event. An investor may also opt to reinvest the same distribution into additional shares, but that is not a different share class option. Accumulation share class simply does not have a distribution, hence the NAV of the share class does not get impacted on the distribution dates. It is important to note that the distribution of a fund is not necessarily generated naturally from dividends and coupon payouts in the fund's underlying portfolio. Some funds will create share classes with high distributions that may lead to declining NAVs over time, if there is investor demand for such products. Currency option defines the currency used for the share class subscriptions and redemptions, as well as the NAV. Distribution payout usually follows the currency option as well. Currency hedging option defines if there is hedging actions deployed in the portfolio for the share class. This applies to fund share classes that are in currencies different from the fund's base currency or the underlying investment's currencies. For example, a global equity fund can have a Singapore dollar hedged share class and a Singapore dollar unhedged share class, whereby the hedged share class provides some form of currency hedging on the Singapore dollars against the different currency exposures in the underlying global equity portfolio. Let's go through a quick example again, using the same Schroder ISF Asian Equity Yield Fund. This time, looking specifically at a share class called A, MDIS, SGDH. The A refers to A investor type share class, which is a retail share class available to all investors. You will find the details in the prospectus, which state the A share class of this fund have a management fee of 1.5% and the upfront fee is allowable up to 5%. It also has a minimum initial amount, additional amount, and holding amount of US dollars or Euro 1000. The MDIS means that this share class is a distribution share class and has a monthly distribution frequency. The SGD refer to the share class currency as Singapore dollars, and the H means that the share class has currency hedging. When investing in a mutual fund, it is important to consider the share class that you are going for because the different combinations can lead to very different performances, even though it is the same fund. Hopefully this video has given you a better overview and understanding of how mutual fund companies are structured, as well as what are the things to look out for in fund share classes. This concludes this video. Do check out my other videos to find out and learn more about mutual funds. If you find this video useful and would like to see more related contents, please click on like and subscribe to the channel, as well as share this video to someone else that might find this useful too. Last but not least, if you spot any mistakes or inaccurate information in this video, or have any suggestions to help improve this video, please do drop a comment below. Thank you and have a great day.